The biggest change though that we've all seen happening is as organizations have shifted from growth at all costs to efficient growth, right? That ethos and the actual strategy and operations behind that has shifted, right? From it has pushed its way down right into the RevOps organization. So I think
All right, everybody, welcome back to the RevAmp podcast. Really excited to have today's guest, Jeremey Donovan, with us. I had the opportunity to meet Jeremey in person recently at the RevOps Alliance Summit in New York, and just fascinating background. I'm really excited to kind of dive into some topics with you, Jeremey. But before we get things started, why don't you tell the audience a little bit about yourself, your background, kind of how you came to where you're at today?
Yeah, grateful to be on, and I'll keep it brief. So I have a sort of eclectic history for maybe as common for people that are 50 and above. My background started in engineering and then into product, into marketing, and then ultimately into sales and revenue operations. So definitely, the end is the best here. The revenue operations has been a lot of fun, a lot of learning. I love how analytical it is. So these days I'm at Insight Partners. We're a VC with $80 billion of assets under management and about 500 portfolio companies, all in B2B SaaS. And the cool thing about that, and maybe hopefully the relevant thing for your listeners, is I get to see every kind of B2B SaaS business model, right? People selling from, $1,000 transactional business to $10 million mega sales in every country. So every motion, I get to see a lot of things. So I'm a little bit of a kid in the candy store on that, and I get a decent amount of data from those 500 companies as well.
Yeah, that's super exciting. I mean, I know, we're going to dive into some of the, conceptually and about, metrics and what a RevOps org looks like at a, scaled company. But I'm interested, given your perch and your view of those companies, what have you kind of observed in terms of changes over the last few years? I mean, it's a topic I've talked to a lot of people about. Obviously, we've had, the pace of change has been wild. But have you kind of seen leading indicators before big changes have happened? And are you seeing anything in the tea leaves yet right now about what's to come?
In the future of revenue operations, yeah. I mean,
Yeah.
it's been obviously there's been the retitling of sales operations and the potential broadening. I say the potential broadening because the truth is a lot of revenue operations still is sales operations. And I'd love to see, some data on what those responsibility splits are, but I would assume the vast majority is pure sales ops, increasingly absorbing customer success operations in as well. And then, at least from where I sit, it's rather rare to see truly consolidated RevOps, which would be sales, CS, and marketing. I just don't see a lot of that. And I thought a lot about what that reporting structure, should look like and why, what's best contextually. And I've come to the conclusion that, being in the operating side, being on the venture side, that it makes sense for the right-hand person, to be with the relevant leader. So for instance, right, if you have peers who are a chief customer officer, a chief revenue or sales officer, and a chief marketing officer, they probably each have their distributed RevOps, right? Like they probably each have their own people. As you start to combine those leaders together, right? If someone's increasingly head of revenue and customer success, like a head of commercial operator, chief commercial officer or something like that, right? You pull those together and so on. So I think that's, like, to me, that's the logical thing. There is obviously an alternative, and we do see some of that sometimes, which is, right, you take the RevOps function, even when you have those peer leaders, and you put that underneath some other leader, usually a COO or a CFO, right? Some neutral third party. And that makes sense when the coordination especially between sales and marketing, is is kind of broken, and the only way to fix it is to consolidate that data flow and process flow. So we do see that sometimes, but it's still very rare amongst at least the companies I deal with. We invest in companies of all sizes, but I generally deal with companies in the 10 to $100 million range. So in that range, the truly consolidated head of revenue operations that spans all three functions is quite rare.
Yeah. So it's interesting. Do you think that some of this move, where a company will have someone with a title that's revenue operations, but it's in fact, sales operations in a different form? Do you think that's more about kind of going with the flow of everybody's talking about RevOps, but so they have to have a RevOps function, but it's not fully kind of embracing conceptually what it's supposed to be?
Yeah, I mean, another word for that is title inflation. So yeah, I do think that there's title inflation, and I'm guilty of it too. When I was in my prior employer, um, we separated sales, customer success, and marketing, and really I was in charge of sales operations, but and strategy. But I styled myself revenue operations, right? Although I did work on an increasing number of customer success operations projects and a handful of marketing, but there you know, I was cooperating right with my peers inside of the other organizations. And you were also asking about like what's changed and dividing the tea leaves. I don't I would not I think I can forecast revenue pretty well, but I wouldn't be able to forecast the future of revenue strategy and operations all that effectively beyond what all of us can see off the tip of our nose. The biggest change though that we've all seen happening is as organizations have shifted from growth at all costs to efficient growth, right? That ethos and the actual strategy and operations behind that has shifted, right? From it has pushed its way down right into the RevOps organization. So I think RevOps leaders, or I know RevOps leaders, are paying a whole heck of a lot more attention to things that I think were more conventionally in FP&A and in finance, to understand, right, what is the actual return or cost of various channels, right? So before it was enough to know, hey, like the SDR team is contributing X dollars of bookings, AEs are self-sourcing X dollars of bookings, inbound is generating, right, same thing, X dollars of bookings. Now I think it's falling upon RevOps people to think really more about like optimizing and tuning across those channels. Am I spending too much, let's say, on outbound SDRs, and if in terms of what they're generating, and if that's the case, then how do I shift those dollars, right? Like it becomes a much more strategic decision about shifting those dollars over to either more AEs or more inbound or investing in a partner channel, right? So that's just an example of an efficiency mindset that I think not think that has absolutely changed within the RevOps world.
Yeah. And so, you have this opportunity, I guess, from where you sit you've probably seen the good, the bad, the ugly, and everything in between in terms of what an organization, especially a RevOps organization, looks like. So, when we're talking about a company that is, healthily has scaled in a healthy manner, it has now embraced this, kind of shed the growth at all costs mantra and has embraced, efficient growth. What is that from a RevOps perspective? What does that organization look like? What is, if someone is listening to this podcast or watching us right now, at a company that is, looking to scale and they want to kind of build out the RevOps organization for success, what is the North Star? What does good look like?
Yeah, there's probably more than three. I'm just kind of coming up with this on the fly based on observation, but there's at least three-ish phases, I suppose. Phase one, super early, right, is the jack of all trades, and very heavy tilt towards CRM at like development and administration and reporting, right? I think that's like phase one. Phase two, right, is now you've got a head of the function. You're able to focus a lot more on strategy. You still have the tools and systems piece, And now you're starting to handle more complex things around compensation and territory and so on, but you're still a pretty small team. Um, I'll give it 4 phases, I guess. Phase 3 is okay. Now you've built out, you've got a head of revenue strategy and operations, and then you've built out some of the functional areas, right? You've got on the sales side, someone doing comp and quota, someone probably doing account and territory management. You've got deal desk, you've got analytics and forecasting, right? You got all the major pieces that are and systems and tools, obviously. You got all those major pieces, and then probably the head of RevOps is doing more of the strategy and planning work in partnership with FP&A, right? And then if it's true RevOps, you've got some marketing ops people in there, and you've got some CS ops people who tend to be more like systems and analytics focused. The phase that a lot of people don't see, that's really the bigger company thing, and I'll call this, I guess, phase 4 if I'm tracking my numbers correctly, is the next phase is to start to, as companies get bigger, right? You need to align to functional heads of businesses. So here's an example, right? Let's say you've got a big revenue organization that's segmented. I mean, it could be many ways, but we see more segmentation around size, right? So maybe you've got an SMB org, a mid-market org, and an enterprise org. At that point, the RevOps org should operate with the same principle that like an HR or finance org operates with, where they have business unit partners. So you probably, at least on the analytics and forecasting cluster of the team, are going to now assign basically revenue operations partners over to the SMB leader, the mid-market leader, and the enterprise leader. So that's a part I think that people don't, who are in smaller companies don't necessarily see, is like that business partner concept. That's really the next big thing. And then otherwise the functions just, scale. I guess if there was one other change independent of the scale thing, right, is the increase, again, no surprise, like the increasing availability of tools to help with revenue operations as you get bigger and bigger. Like you probably don't need a territory planning tool when you're, even 100 reps, but when you're 1,000 reps, you absolutely need a territory planning tool, because otherwise you're going to have an army of humans trying to figure things out, and it's just a mess.
Yeah. You mentioned early on this shift that's taking place that we all have seen, which is, the mantra of growth at all costs. It really doesn't matter what your cost of acquisition is, how much you're burning, as long as you're getting new customers. And there was a hard U-turn sometime in the last year
and a half or so. Yeah.
Maybe if we had to pinpoint it, maybe that weekend that Silicon Valley Bank happened, it may have been kind of a turning point. At least in kind of my bubble, it seemed like it was. But so given that shift that has been pretty stark, have the metrics that are important, that RevOps should be following, that companies should be optimizing for, have they changed? And if so, how have they changed?
Yeah. I think it's hard for me to say broadly. I mean, I think the number one metric that RevOps people may not have been paying as close attention to that they are now is CAC payback. I think that's probably like the big one. So that's sales and marketing expense over new bookings, inclusive of new logos and expansion growth. So right in if you double click on that, right, you've got sales expense. We'll come back to that in a second. You got marketing expense, you got new logo growth, you got expansion growth. So you sort of have to optimize every one of those four pieces. And on the sales expense, right, it's mostly people, and to a lesser extent, and to some extent tools. I mean, there's obviously tool spending consolidation happening. On the people side, though, that's where there's just so much more of the expense. So I think that then merits much deeper look at like who you hire and how you onboard and train reps, how you coach and get them to productivity, and then how you assess and manage their performance to make sure that you have the right reps on board. Becomes this especially important in enterprise selling, where I mean it can easily take a year to figure out whether a rep is a good egg or a bad egg. and that's a really expensive year, not just in what you outlay to an enterprise rep, right? Because the typical enterprise rep is a 300K OTE, so 150 base. You know, even if they were to only hit 50% of quota, right, you're paying them a tremendous amount in terms of not just dollars, but it's always in a like a cost of sales percentage, and then you've got the opportunity cost of not having hired somebody, you know, who is more suitable for the job. I mean, I think people are suitable in different environments, but you know, critical to get someone suitable for the job. So yeah, CAC payback, I think is probably the big one that people can and are and should be paying attention to from a RevOps perspective. A level up, like it's LTV to CAC. LTV is so mystical to calculate. And then, you know, the other big one, maybe the biggest one of all from the CFO and CEO perspective is rule of 40. That's harder for the RevOps person to, you know, to really optimize, because that includes so many elements, you know, that are in free cash flow margin that have nothing to, that are out of the control of the, you know, of the RevOps person.
Yeah, it's so fascinating. You know, my expectation of what your answer would be was going to be, you know, net revenue retention or net dollar retention, whatever, however you define it. But I found it's super interesting that you went to the CAC payback period, the rule of 40. Is that because NRR, from your perspective, was already an important metric, or is
I
it
think,
it doesn't?
yeah, I mean, NRR is embedded for me within CAC payback, right? Like in that denominator is your new logo and your expansion bookings. So in your expansion bookings, that if you were to double click on that, that's where NRR, and yeah, that's where NRR is. So yes, absolutely one of the critical SaaS metrics. But yeah, to me, it's embedded in the CAC payback
Yeah.
Piece.
And for the folks at home, and also to jostle my memory, do you have like a kind of quick and easy definition of the rule of 40?
Yeah, yeah. By the way, when I came, I've been doing this for 2 years. I moved over from, you know, from head of revenue strategy and operations at one of our portfolio companies, and when I came in, I had no idea what Rule of 40 is. I'd heard of it. I didn't know whether it was important or not. And I have an engineering background originally, so I had to, and a stats background. So I had to figure out like, what is this thing and why is it important, or is it important actually? So what it is it's just the sum of two numbers. It's the sum of your free cash flow margin and your ARR growth. ARR growth, I think, pretty straightforward. Free cash flow margin, not as straightforward, right, for people who don't have finance backgrounds, but that's basically all your OpEx. OpEx is sales and marketing, R&D, and general and administrative costs. And then it's got, you know, some other more financial numbers in there, like your CapEx and so forth. So you add free cash flow margin and ARR growth, and the rule of 40 means you want that sum to be over 40. So if you had like 50% growth and negative 10% free cash flow margin, you'd be at 40. And so like that's what the definition is. But I went and pulled valuations of public SaaS companies and what their rules of 40, I guess it would be, were at the various times in history. And there's a very high correlation between valuation and rule of 40. And it's actually not linear. So if that sum of ARR growth and free cash flow margin is under 40, like the multiple that you get is relatively like low and doesn't increase very much as you improve. But once you pass 40, there's like a nonlinear increase in the multiple that you get on the value of your company relative to your next 12 months projected revenue. So it really does matter. What does change over time is the weighting in the regression between free cash flow margin, right, efficiency, and ARR growth. So you can't like divine the tea leaves and predict that. We shifted into a world where you know, the weighting used to be way more on growth and very little on efficiency. And, you know, we've been operating in a world where the efficiency side got much more important. I feel as though, and I have to rerun the data, but I think the correlations are probably swinging a little more strongly over back towards the growth side now that companies have spent, a year and a year and a half getting efficient in whatever, ways. Sometimes that's a euphemism, right, for riffs, unfortunately. But it's also, there were other ways to get efficient besides, the besides riffing folks. So yeah, now that things are cleaned up, I think folks, are looking for growth, but I'd have to verify that with a repeat of that old analysis.
Yeah, I mean, that was actually going to be my next question, which is, do you foresee us in this time of focus on efficiency rather, and not kind of shifting back towards the growth mindset that we had, or if there's, let's say, a light towards the end of the tunnel for some folks? It sounds like,
It's
you
an
may not have
and.
the hard numbers, but you're seeing some.
Yeah, it's an and, right? Like I think the humans, because of humans be humans, we swing back and forth, right, between extremes, and I do feel as though the pendulum is swinging in that balance a little more towards back towards growth, because again we just clean the efficiency piece up. So it's we're always worried about the thing we don't have. So now that we have efficiency, generally, we're swinging back towards trying to figure out how we drive, more growth from new logos or from expansion.
Yeah. So looking forward, assuming we start swinging away from some of the more severe efficiency, things that companies had done to get that efficiency, like, reductions in force and things like of that nature. And we hit some sort of steady state where there's, we take efficiency into account, but we're also having that focus on growth. How does that look for in a revenue organization in general about where their focus should be and how to kind of optimize for that new reality?
Yeah. On that note, like I've, at least in the work that I've done in the past or with the portfolio companies I'm working with now, I'm always on the lookout for what are things people have done in order to, make a substantial change in the business, whether that's to make the business more efficient or to help it grow. So yeah, on the growth side, if I reflect on personal experiences, some of the most needle moving things I've done, I would probably put it in, maybe the biggest needle thing I ever did was probably account scoring and territory management, especially when we were growing super fast, right? Is we knew the total universe of accounts that we were going to sell to, and we had assigned all those accounts out, but the reps almost had too many accounts, and we're struggling to figure out which ones were which. So we put a ton of effort into really sophisticated algorithmic account scoring. These days, there's more off the shelf tools, I think, to help you do that. But I think even with the off the shelf tools, there's a lot of work that needs to go into that. And then, once you've scored the accounts, you really need to verify with your reps that scoring and that ranking makes sense. On one of the things that we had done, right, we came up with a pretty wicked, what we thought was a wicked score, showed it to a pilot group of reps, and they rejected it. And we said, like, what's wrong? And it turned out that there were two additional things that those reps were looking at, two additional signals, if you will. So we put those signals into the algorithm also, and then, like, bingo, the ranking matched their expectations, and that was like step one. And then step two was then assigning those territories out in a appropriate way, generally equal potential, but we could have probably a whole podcast discussion on whether, like, should territories be equal potential, or should you be giving the best reps the best accounts? That's like a tricky, a tricky question. And who's to say that someone's the best rep? Are they just the best rep because they got a great territory? Sometimes that's the case too. So yeah, there's like arguments to be had on both sides of that. So that was one. And then I've also looked to try to see instances of where, maybe a CEO replaced their CRO inside of our portfolio, and then when has that move really moved? When has that move accelerated whatever efficient growth within companies? And I've definitely seen that a bunch of times. I've seen times when it hasn't made a difference. But the times when I've seen it make a difference, usually it's because because someone comes in with way more rigor. I think I read a quote, or I heard on another podcast, I heard a CRO say, you need to come in with a playbook written in pencil, not in pen. So there is the come in with a playbook, but the pencil is you're probably going to have to adjust a little bit, right, to the context of the organization. But when those great new CROs come in, it's really, it's not, we all know everyone knows what to do. So for a good example of this is like deal inspection, that great new CROs are maniacal about deal inspection. And the old CRO, it wasn't that they weren't doing deal inspection, but they just didn't have the discipline and the rigor around it, or pipeline generation, right? Like they didn't have the discipline and rigor. And I'll credit, I don't invent anything. I'm like a curator. So that pattern, that pattern is the pattern from PTC, blade logic people all around pipe gen, deal inspection, the use of medic and enterprise selling, or suitable methodologies in SMB and lower mid-market selling. We know what to do. The success and failure, assuming that the product market fit is there within reason, right, is all about disciplined execution.
Yeah. Wow, there's so many things for me to double click on, but we're down to about 4 minutes left here. But I do have a question about the the scoring, because I find this fascinating, and it's something I'm seeing actually across. So I was at a dinner recently, and around the room, the one thing that was the same for every single person was the company was shifting from inbound to outbound. It was universal and different companies altogether. I thought that was fascinating, because we're also seeing some of that. And we're not completely shifting, but obviously we're putting much more on account-based stuff, and scoring is really important there. And I'm sure you had, your algorithm was sophisticated and all this, but was the focus mostly on the characteristics of the account, or was it on behavior, like from external signals, or was it both? Was there recency?
It was, yeah. There's no secret. Again, like I'm not secretive about it. It's because the devil's in the execution. So we used binomial logistic regression, which gives you a probability that an account is a good account, and we were measuring that on whether or not we were able to generate opportunities in the past with lookalike accounts. So it's like probability of generating an op with an account, and then the independent factors that went into that were firmographics, right? Industry size, geo, funding, whatever, technographics. And we found that there were both technologies that were predictive of being more likely or less likely to win an opportunity. And then intent. So that was your part about like behavioral stuff, both first party intent and third party intent signals. And then the fourth category was like kind of a little bit of the secret sauce, but it's stuff that's really specific to your firm. So in that instance, we were selling to salespeople, so it mattered how many salespeople you had, sort of right? It mattered, and so to be able to figure out what their hiring patterns were, and how many of different types of roles they had within their organization, like those things were all fed into the model with appropriate scoring and weighting factors.
Love that stuff. Jeremy, it's been super fascinating. Thank you so much for taking the time to chat today. Before we say goodbye, is there anything you want to tell the folks at home about how they can learn more about what you're doing, what Insight Partner's doing, connect with you anywhere?
Yeah, I mean, I would say it's more about trying to give back at this point in my career. So my big give back these days is I put up a site called revenue-playbook, revenue-playbook.com. So everything there is what I've been learning in this job over the last 2 years. So it's just a totally free resource. And hopefully people find that valuable, because there's a ton of stuff on RevOps there. And otherwise, yeah, I would say connect with me on LinkedIn, but I'm out of connection. So if you guys want, I do try to post something every day. Just follow me on LinkedIn would be another way I can give back some value.
Awesome. Jeremy, thank you so much for taking the time, and hopefully we'll get to see each other again soon at another event.
Cool. Thanks, Mark.
Bye-bye.